Right, welcome everybody. I'm Giuseppe Basile, also known as the Fib Stalker, and welcome to this seminar. Today is August 28th, 2018, and we're here for the bi-weekly seminar on fxtrade.com. Today I'm going to talk about the skills of trading. And before I get there, I want to remind you that everything I say needs to be double-checked. Particularly, past performance is not indicative of future results. Trading forex and other derivatives carries a high level of risk. It may not be suitable for all investors. Okay, I'm already providing this material for you for your general information. And Fib Stalker Trading, myself, Fib Stalker Consulting Incorporated, FX Street, and all the other agency involved will not be responsible for any losses incurred on investments made by readers and clients as a result of any information that is provided in this presentation. So if you're watching the recording here, please stop the video here and read and accept the disclaimer here. Just a little bit about myself. I'm a full-time trader and now also fund manager, and I've been mentoring and othering for many years now. I'm national director, board director for the CSTA, the Canadian Society of Techie Analysts, particularly with responsibility on the Toronto region, and I'm also a professional member of the organization. I've published many papers. My background, I'm a computer science engineer. I earned the master's in 1999 and worked as a consultant, IT consultant with Accenture for many years. I then changed into finance and I hold a master's in finance in 2010. I'm also a certified market technician with the SIAT and the IFTA. I started in 2000s. I committed to the research in 2003, and that's very, very important. I also understood the importance of mentoring, maybe too late in 2006. I've put up more than 22,000 hours of market exposures. I had mentors, Van Tarpuri, Ivica Jurasis, David Asley, only to name a few. I offer a lot of free material, information, courses and coaching, and you can start from fibstalkertrading.com/free. But if you stay with me here, I'm going to provide you a lot of other free resources today before we start. You can also join my Facebook mastermind at fibstalkertrading.com/Facebook. It's called Forex Stocks and Futures Trading Mastermind, and I'm also involved in education and offer two programs: the Fib Stalker Methods Coaching Program and the new Fearless Trader Workshop, which is having a great impact and success. These are some of the company I worked with and keep working with, and this is myself here. I wrote a number of research papers. An examination of the linkages between money management and trading goals has also won an award in 2016, and you can download it on fibstalker.com. A number of other papers I have written already during the years on unique approaches. Now, before we get into the material, I want to offer you free courses, seminars, and material. It's a lot of material that I have online for you. You can start from fibstalkertrading.com/free and you get the free package here where I provide a free coaching of 6 hours of videos and also access to my trading room for a limited time, as well as 5 key concepts to correct your trading behavior, and it's very important you read that book. Now, as I mentioned before, I've recently started a new program, the Fearless Trader Workshop, and what you see here is the main page. It's a 12-week intensive workshop, and if you are interested, you can go to fibstalkertrading.com/fearless trader, and this is only for really for serious traders who want to quickly bring day trading to a very advanced level, and with the objective of becoming profitable and consistent in a few months and not many years as it took to me. This is an invitation only the program, and I reject many prospects because I don't believe that everybody is right for this program, or this program is right for everybody. And I'm looking for people who are motivated, they're willing to put the effort in, they have resources, and they consider trading as a business. You'll need to sign a non-disclosure agreement upon subscription. In this 12-week intensive workshop, which you're going to get, it's really, it's a program that helps you with a procedural guided trading process. That's what we set up during this period. There is also 3 months period of consolidation. You're going to get 5 robust and profitable, yet very simple trading systems, and the success rate of this program is very high. So if you are interested, you can go to fipstocketrading.com/fearless-trader, and we can discuss, I can give you more details. When you go there, you can download the leaflet of the program, which is what you see here on the left side, and it's something like this really, that gives you all the information, the content, the structure, and every week what is provided, the objectives, why what we teach is important, and this covers all the weeks plus the bonus material, and then also the way the program is delivered. All right, so if you go to fipstocketrading.com/fearless and you fill in your information, you're going to get also access to the Fearless Trader Breakthrough Seminar. What is that? You get an email to 2 links, and you get access to the Fearless Trader Breakthrough Seminar, which is a 4-hour seminar that explains to you what are the steps and the skills of trading. So we're going to cover some of this in this seminar. Now, if you're interested and you feel the program might be right for you, then schedule a meeting with me. Contact me at fipstocketrading.com, fipstocker@gmail.com, and actually we can have a chat and see whether the program is right for you. When you do that, I'm going to offer you the 10 steps to successful trading webinar, as well as the 15 strategies for entry, stop setting, risk and money management. So there's really a lot of information for you here. Now let's get into the content, the skills of trading. When you start trading, there are a number of areas you will need to master, and you might ask, what are these areas? I mean, many people only focus on the methodology. Give me the entry, give me the setup, but that's the simplest part, believe it or not. What is most difficult to establish a routine, work around processes, and go through the journey. Before we get to the detail of the areas that you need to master, you need to understand that trading is a journey, and it will require for you to master a number of processes, and that's what you really need. You will need a process to become profitable and consistent, and the way I see trading, it's really moving from where you are, today's situation where you might not be happy, and through a number of steps getting into a point B where you're happy and you are profitable and consistent. We also need a process to analyze price, execute price discovery, which means understand what price can likely going to do next, and then come up with a set of valid trading ideas and setups. Okay, that's very important. Of course, once you have the valid idea, which actually are grounded in the way the market works, the way the major participants like algorithms, smart money, and dump money trade the market, then you will need a process to time and execute trades on the trading setups that you have identified. That's not all. It does not end here. You will need more. You will need a process that helps you collect also your trading data which really speak about your trading and your performance, and then have a process that allows you to evaluate your performance to see whether you're on course, you're actually realizing the reliability, expectancy of your methodology, or there are any changes that you need to make. And a lot of people that are not even aware of this, and they think that this is a very boring activity. In fact, it is a boring activity. But anything that is boring, it's actually the things that are boring are the actual things that will help you grow as a trader. So if you want to become a successful trader, you must get guidance to understand and travel the journey, because it is a journey. And when you begin, you have to know where you have to go and what you have to learn. You have to set up and execute the right processes, and also establish a routine to execute them again and again. And when we talk about process and routines, just want to share here, the analysis they do on the market every day to understand direction. We get a direction score here, and also a timing score and a total score that helps me selecting the pairs I should focus on. Okay, that's just to give you an idea of the routine and the techniques and processes that you want to follow in order to be consistent and consistently find and trade opportunity. So what it really means to learn trading, it all revolves again around these three key words. Everything revolves around the journey that you have to take to learn and master the techniques, the methods and the tools to become profitable and consistent. Plus, it revolves around the processes that you have to execute consistently to identify opportunities, validate them against fundamental behaviors of price, and we're going to talk about this, what are these fundamental behaviors of price and the markets. And finally, establish a routine that you must follow regularly and execute regularly, where you do the analysis, you identify the setups, you time the entry, you manage the trades, you measure and evaluate your performance. Okay, so this is what it means to really to learn trading. It's not about the method, it's not about making $300 on a trade. It's about taking a journey, learning processes, and establishing a routine so that you can really grow your capital, either with your own money and other people's money and the money that the profits that you extract from the market, and you start building an account that is up, that can give results that are life-changing. Okay, so these are the key words. It's a journey. You have to take a journey. You have to learn to execute processes, and you have to establish a routine. This is trading as a business. Now, what I want to do here next, I want to look at trading from 6 different angles and dimensions, with the hope that you can better understand what is really required to become a trader, a successful trader. Okay, so we're going to look at the steps to become a successful trader, the journey. We're going to look at the pillars for successful trading. What are the areas, the methods, the technique that you need to master, and also how to really consider trading as a business. We're going to look at the truth of trading and principles of trading, the principles of consistency, and this is again about the journey and what really trading is. Then we're going to look at the one model I use, the profitability and consistency model, which really is related to the journey, the methods, the techniques that are used in trading. And then we're going to look at the trader's transformational journey, the process, and the routines, and through the lenses of the content of the Fearless Trader Workshop. And finally, we're going to look at some details at the website of the Fearless Trader Workshop, and look at the areas of mastery and tasks. And we're really going to look at the material, the process and routine. So I'm going to give you a sneak peek into the Fearless Trader Workshop and what it is content. Okay, so what are the steps of the journey? If I had to discuss the journey of trading in a very limited number of steps, these are the steps that you will need to follow. First of all, you have to understand trading. You have to understand the markets and you have to understand that trading is a risky endeavor. So you have to understand risk very, very well. A lot of people actually focus on gains, focus on profits, while if you really understand trading, you really have to focus on risk. You have to manage risk first, and all the rest comes together. But you need to understand what you're getting yourself into. Then you have to start a method that is grounded in markets reality. When I say markets reality, I intend a trading method that actually is kind of supported, reflected by the way the market price moves. And I particularly look at the markets through two different models. One is the smart money, so how algorithms are positioned in all the time frames, and the other is the dump money, which actually shows how the professionals also take advantage of crowd behavior, and it uses tools that are actually very widely used by non-professional traders. Okay, so by putting these two methods together, we can actually end up getting an edge which is grounded really in the way the market works. Of course, the method helps identify opportunities, but then we have to master effective timing techniques. I have multiple timing techniques leveraging both the smart algorithms and dump money, starting from the Fibs-Tolkien timing, which is a proprietary technique for timing, and getting into the two-bar confirmation and other techniques that leverage the crowd, leverage the way the crowd is positioned in the market. Okay, and once you have this information, now you have to adopt a trading process and trading systems that fits you. One of the mistakes I made in the past is to believe that I could get any trading system or any trading process from other successful traders and implement it myself. And simply, you learn that some of the things do not resonate or with you, or you see improvements, or you see a behavior of price that does not allow you to trade that system. So basically that system does not fit you. So I usually present to my students several trading systems, and some of them resonate with them more than others. And I have students very successful with the pure Fibs-Tolkien timing. I have students successful with the smart and dump money systems. But what is important is that you have to you have to find a process and a trading system that fits you. Once you have the process and trading system, you have to make sure that you are able to execute it. The only way to do that is to make sure that you develop a personal discipline, you develop a routine, you always follow it when you make money, when you lose money, and it is very important to work on the trading psychology, and that's a work I do with my students as well. And continuous improvement is also very important. You need to actually measure what you're doing and evaluate what you're doing and correct the issues. And last but not least is invest in coaching method. And this is not self-serving here. In fact, I'm a trader and do coaching on the side. But this is very important. I mean, if I understood this before, I would have saved probably 6 years of my trading career. It took to me more than 12 years to actually start trading consistently. So I spent a lot of time and money, and money can be replenished, by time is never replenished. So if you're really serious about trading, my suggestion is that you invest in coaching and mentoring, and later on I'm going to tell you what you can do. The second viewpoint is the 7 pillars of trading success. Okay, and I use this model to explain what are the skills and area and how you have to consider trading. As A lot of people actually focus about this small piece here. This is between 10 and 15% of trading. The method, it gets the biggest focus, but it's not necessarily the most important thing. And as you can see here, if you look at this diagram, you'll see that the most important thing is the psychology of the trader. The other skills that you need to master is the timing, the money management techniques, and the risk management. Now, money and risk management, they are two different things. They have two different objectives, and you'll need to learn them very carefully. As you can see here, there is also something that probably you don't see anywhere else. It's the psychology of the market. Why that's important, it's close to the method, is that is because the method needs to reflect the needs to reflect the way the market works. Needs to capture something fundamental about the market and the psychology of the market. So I believe that it's very important to study the psychology of the market and make sure that your method actually reflects the psychology of the market. And the bigger chunk here is the trader psychology, and that's about 70 to 80% of the picture here. And that's because you can have the best techniques at your fingertips, but if you're not able to execute with discipline, if you don't get your trading psychology right, and that requires a little bit of time, a little bit of work on yourself, identifying the major mistakes and removing the major mistakes. And only when you do that, then you can actually enjoy consistent regular profits. And finally, trading is a business, so everything is kept together here. But this final round here, last round, is that if you don't consider trading as a business, nothing matters. And you have to make sure the time you put into it, the costs of trading, makes sense based on what you get out of it. There are people who spend tens and tens of hours during the week only to earn a small profit, and they learn very little doing that. And when you consider trading as a business, you also develop a trading business plan, and everything makes sense. You consider that as a business, you evolve your business, yourself or your business in a way that makes economical sense. Otherwise, it's a lot of time, a lot of work done, and you're getting anywhere. All right. So the truth and principles here. I'm talking about the 7 truths of the markets and the 7 principles of the trading and the market here. And you probably have heard about this. Why I mention this is that it is very important that any trading process, trading methodology that you learn needs to satisfy these truths and principles. It took me years to adapt my trading systems to actually satisfy and follow these rules here. So first of all, anything can happen in the market, so you never have to make any kind of assumptions. You don't need to know what's going to happen next to make money. If you have an edge and you measure that edge, you have to keep taking the trades without actually second guessing that. There's a random distribution between win and losses for any given set of variables that define a specific edge. You're not going to win forever and always, no matter how powerful your edge is. Most important thing is to make your wins much larger than your losses. And when things are not working, exiting if the trade is not behaving like you would have anticipated. And really that depends on which kind of setups also you get and which are your anticipation in relation to market behavior. An edge, which is a trading method, is no more than an indication of higher probability of one thing happening over the other. So you never have to marry your position or your view of the market. And every moment in the market is unique. There might be a medium-sized trade that tips the balance, or there may be unreported news that tips the balance. An example of yesterday was the trade the trade agreement between US and Mexico, and those are non-reported, non-planned news, and they can tip the balance. The 7 principles of consistency are very important when it comes to your process, your routine, and your trading method, and you have to make sure that you really abide to these principles consistently. In fact, I suggest you have these 2 principles printed out, as I have in front of you every day, and make sure that your methodology and procedure and processes actually satisfy them. So I objectively identify my edges. Your edge, your procedure, your methodology needs to be written down. It has to be a process which is written down. You always follow it in the same way. It's identified objectively. You define the risk of every trade. If you don't do that, you will not know where to put the stop. When you say that you are wrong and the market is right, the market is always right. So you have to make sure that you don't risk more than a fixed percentage of your account in every trade. I also completely accept the risk, or I'm willing to let go of the trade. Sometimes, price configuration is such that you like to get into the trade, but really the risk, the stop is too far away. A stop that will make you comfortable, taking that trade and making sure you can wait the price does what it has to do before you start moving in your direction. But sometimes that risk is too high, and if it's too high, if it's above your risk parameters, that could be actually 1% or 2% or more, then you should let go of the trade. I also act on my edges without reservation or hesitation. This is very important. If you have a methodology, you made your analysis, and that's suggesting you to get involved, then you should, okay? And you have to set aside all reservations if the opportunity is actually satisfying your analysis and parameters. It's very important. I pay myself as the market makes money available to me. Now, many people start from very small accounts, and of course, they want to keep the money in the account. The problem is that you will get you will blow off, meaning that there will be weeks that will not be as good as others. So one thing I always do whenever I reach certain objectives on my account, I always take money out of my account and pay myself. Okay, and that's something that you have to learn to do systematically, even if you have very small accounts. Okay, because when you remove the money from the markets, you start thinking differently from the remaining market that you have in your account. Number 6, I continually monitor my susceptibility for making errors, which means that I measure myself, I review my trades, I review what I did. When I make mistakes, I review my mistakes. When I don't see things, I try to understand why, and I always try to improve the process if anything like that pops up. And finally, principle number 7, it's really safety rule here, so that you make sure that you actually follow each and one of the previous 6. I understand the absolute necessity of these principles of success, and therefore I never violate them. So this is a safety feature here, and make sure that you follow all these principles of consistency. This is key. It's very important. And if you don't do that, I hear that someone might have problem with the sound. Please give me give me a confirmation here if that's the case. Hi Rashidi, I think Rashidi is the one having the problem here. Hello, let me know if you are okay. Okay. Okay, the sound is fine, so probably it's on your end, and make sure that you watch the recording as well. Now another model that I like to use when we talk about trading, and trading is all about reaching profitability and consistency, is the profitability and consistency model. In here, as you can see, trading is represented as a journey. The journey is the journey of this tree here. You start from 0 here and you want to go to hero. 0 is when you're starting and you're not profitable yet. At some point you become profitable and then you can become consistent. But as you can see here, in order to do that, you have to solve problems. Okay, you have to solve problems here, and the way and this is the way I see it. When you start, you start analyzing the price. You start creating models of what price should do next, and then you make observation on price, and then you take the trade, and something goes wrong. So you have a problem, you solve the problem, and then leads you to another problem, and yet another problem, and thousands of price observations and problems until you get to the point where you are profitable. And the lower part of the tree here, when you get into profitability, it's all about the techniques. So the corresponding skills and areas you have to take care of are here on the right side of this model. You have to learn a trading method and how to time. You have to learn money management. You have to learn risk management. You have to understand the psychology of the market, how price moves and what moves price. Then you have to start identifying trading systems that can help you, rule-based trading system that can help you automate what you do, or at least establish a rule-based approach. And then you need to get into your mind and start understanding what is the psychology of your own psychology, what you're making, what you're doing, why you are doing what you're doing, and also tune the trading system, test and paper trade. You have to work on your own confidence and get all the information to tune your trading system. Once you're profitable, that's not the end of it, because you need to reach consistency as well. And now consistency requires that you do not work any longer with the techniques here and the methodology, but you have to start working with your own mind. So this is where you elevate here your game, and you start solving these new problems which are really related about your mind, how you behave, how you do execute the process, your routine. And so it's very important when you get into the higher part of this tree here that you look at your mission and values, your market beliefs that affect the way you trade, your objectives that affect the way you trade. And also you consider trading, you consider apply game theory to trading, calculate your statistics, and look at what you have to improve. So the upper part here, you're bringing the game to a whole new level, whereas now the psychology of the trading is the most important, and not the mechanics of trading, which is the techniques that you learn in the lower part. Okay, so this is the profitability and consistency model. It's very, very important model to understand how to get to consistency, and that's what I use consistently with my students as well. Okay, another way, another angle we can look at trading and trading success is to look at the transformational journey, the steps of the trader's transformational journey. Okay, we need to go from A to B. If we need to go from A to B, we need to make some changes. In order to make some changes, and this is really the process of trading, we need to, or learning trading, we need to transform. We need to transform into a trader which is a consistent loser, into a trader which is a consistent profitable, and and consistent trader. So the way we can look at that and the things that you will need to master in this transformational journey are here provided in 10 steps, and these are really the steps of the Fearless Trader program. Number one, we look at the psychology, we assess and establish a mindset that is successful for trading, because you have to understand risk. And the way we do this is mainly through simulations, showing you what can happen and what you have to learn to look at and how you have to consider risk in your trading. Step number two here, we start looking at the methodology, and we actually study how to read price and understand market direction under two different models of analyzing the market. The smart money method that uses algorithms, how algorithms, major algorithms are positioned in the on the larger time frames as well as the smaller time frames, as well as the dump money methods that use how the crowd is positioned in the markets. Then we start looking at the techniques, and we speak about advanced risk management. Now, risk management is all about protecting capital, and there's a lot of confusion in people about risk management and money management. There are two different things, okay? Risk management is just to protect your capital. On the other hand, money management is, we use it to reach trading objectives. And number four here, we keep working on techniques and we learn advanced money management to reach trading objectives. So we have psychology, setting up the right mindset, we have the methodology, how to read price and understand the market direction, and then we have some techniques that help us to protect your capital and reach our trading objectives. We then continue, once we know how to read price, we need to identify setups. So we actually project what the market can do next, and then we use timing to actually enter low risk opportunities, low risk setups. Okay, and this is part of the methodology as well. As I mentioned before, if you're not able to measure ourselves, then there is no space for improvement. So how do we measure trading performance? That's something that there's techniques to do that, and something that we teach in this step here related to techniques. So once we have, we can read price and we can understand market direction, and we can identify setups and time the opportunities, it's time to support all that with a very well thought and very well organized process. And there are two main processes here, the price structure analysis and the price discovery analysis, in which we identify how smart money and dump money are positioned in price in all time frames, and how we use that information to discover what can happen next. And all this information then it's funneled into trading systems. There are many trading systems that you can use, but using concept from smart money and dump money, but you can use any other trading system. I'm giving you the what I believe are the main steps of the transformational journey here to become a successful trader. And number 9 here is we go back, and you need to work on psychology, and it's important that you are able to execute a target trading system. You can execute all the processes that you must perform in order to get the information that you need, the setups and the information that you need to trade. And finally, again, monitoring yourself, monitoring your trading, and continuously improve. Okay, so this is an ideas of the steps, ideal steps that you will want to execute, and the areas that you need to master in order to complete that journey that brings you from where you are now to becoming a successful trader. Okay. There are a number of other areas that there's a number of areas that you want to master as well, and I matched them to the content of the Fearless Trader workshop for convenience here. And Number one, you need to establish a mindset for successful trading. Again, how to read price, smart money. I also want to have from Adinda whether I can continue for 20 minutes or more, or if we have anything else coming up. Adinda, please let me know. So how to read price, but smart money and dump money, that's very, very important. So in week 3, we look at advanced risk management to protect capital. And we look then at the counterpart of week 2 when we look at how to read price with smart money. We also look at how dump money influences price, which is how to read price using dump money, advanced money management objectives, timing, low risk opportunities, and I'd like to actually guide you very quickly through the website of the Fearless Trader Workshop, and that's what we have here. So there's an introduction, and in week 1, this is what we do. We look at the principles of successful trading. We do a number of trading risk and a simulation to understand what can happen, and then we look at basic trading strategy. So we actually establish the mindset for successful trading. This continues also in week 2 here. Particularly in week 2, we look at the a number of we start looking at techniques here, and we look at the Fib-Stalker methods, which is the way we analyze price. We read price using Fib-Stalker, using algorithms basically. So we look at the non-conventional use of Fibonacci. We look at the definitions, how algorithms moves, how we model algorithms, traditional measure moves, extension measure moves, how we model trends, and we look at some basic rules, jumping extensions, and some other information like ambush trades, how we avoid perception filters, and the some specific setups. And there are also tracing workshops that help you actually apply the smart money and algorithms to read price. Risk management is very, very important. There's an introduction to risk management, how we practice risk management. There are different types of risk management, pattern-based risk management, and then we talk about advanced risk management, risk-free and reduced risk trading, and there are strategies to set the stops, and I help you identifying your risk model. Okay, in week 4, we go back to methodology and we look at how dump money influences price. So there's an introduction to dump money, definitions, and how dump money moves, how dump money actually moves the price. Look at modeling sequences of dump money moves like we did for algorithms, sequence of algorithms, features of dump money, what are the tools that we use. The transitional sequence is very, very important, how the market actually moves from one state to another, and basic rules for decision making when we use dump money. In week 5, we actually look at advanced money management. As I mentioned before, risk management is to protect your capital, and money management, on the other hand, is to reach trading objectives. So I let you play a game. We play a game together, how to challenge yourself for greater returns, and we look at how, in fact, I demonstrate you how, in fact, money management can affect your trading results and trading objectives. There's an introduction to money management. We look at the core money management techniques that I ask you to use. We look at more advanced market money management techniques like the market's money layers, and also the models that you have to avoid, and models that are very, very dangerous. And finally, we close with the scaling in techniques, which is really pyramiding, and that's where the real money is. Okay, in week 6, we look at timing. Timing is very important. Once we have identified the opportunity, we need to time low risk opportunity with smart money methods. And we look at the fractal behavior and timing and Fib-Stalking timing, which is the way we use algorithms. Our algorithms are positioned on a smaller time frame to actually time the entry. We look at the basic of this technique, which I call Fib-Stalking timing. Look at the way to enter and where we put the stops, the correct execution of the Fib-Stalking timing, and I give many examples, and also how we take the trade practically with the Fib-Stalking timing, and more examples, and also advanced technique for Fib-Stalking timing. The other ways to enter or improve the entry, and then we focus on a number of tracing workshops in which I teach you step by step how to time. Okay, we do the same, the timing low risk opportunities with dump money methods, an introduction to timing with dump money, with the basic of dump money timing, how we do that, the entry and stops with one type of setups, the value area based timing, the 2-bar confirmation entry, which is one way of timing using dump money. Okay, in week 8, we go back to the techniques, and I teach you how to measure trading performance, introduction to trading evaluation, expectancy and variability, how we measure that, how we evaluate the quality of your trading. That's what we cover in week 8. Week 9, we look at the step-by-step overall trading process, which is made of different sub-processes. I give you an introduction to price structure and price discovery using smart money, and price structure analysis again uses smart money, which is using the way algorithms are positioned on all time frames in order to identify setups, validate those setups, and try to understand what can happen next. Okay, we all then look at the process to perform the price structure analysis in daily, weekly time frames using again smart money, how we identify what happens after trend violation, how we identify what can happen next when a trend fails. And we also look at the price discovery stalking timing, which is the timing technique. We do the same for dump on, and this is the overall trading process that I'll teach you how to execute. Price structure analysis using smart money. And now we start the price structure analysis using dump money here. And then again, price discovery using smart money and price discovery using dump money. These are the processes that you need to master if you want to become a successful trader. In week 10, we go and talk about the trading systems. Particularly in this program, I offer 5 different trading systems, and those trading systems leverage both the algorithms, the smart money, as well as the dump money, the way the crowd works. So you can see here there are templates, and then there are the 5 trading systems that are provided here on the side. And we look at the parts of a system, trading system templates that we use, the sample of a trading system specification, and what are the characteristics of a trading system specification. And then I do an introduction to trading systems, and I have one video for each of the 5 trading systems here, plus the description here that you find on the site, the actual rules. These are all rules-based system. And in week 11, we look at the trading implementation and execution. So first of all, I introduce trading as a business, and also I explain how the brokerage industry works whether your money is safe or not and what can happen in the market. We analyze all the costs of trading. As you can see, there are several costs of trading here. And we look at trading operations, how we operate our own trading. And again, trading is a business, so you will need to consider trading like that and run trading as a business. The last week I offer information about how to monitor and how to perform continuous improvement here. We look at trading performance excellence and as you can see here we also go through very quickly the profitability and consistency model here. How an organized trader works, the equity curve, the trading diary you have to keep, the action plan for the trading day, and I'm going to share my own action plan here as well. And then there are some Q&As on the trading diary. In the bonus week, week 13, we have an important part, and that's trading as a business. And that's what I help you writing your business trading plan. Okay, so there is a template here I'm going to give you, and it's very important to consider trading as a business. Okay, so I gave you very quickly here another angle, which is through the content of the Fearless Trader Workshop, and that's something that I wanted to share here. In the program, I also give you a number of tools here, including the risk calculators and a number of other tools here that you can find on the website here. And Flipstalker simulator, sample trading strategies, risk models, position sizing calculator, Flipstalker trading analysis process, job ad, how to monitor the cost of trading, trading business plan, and other tools as well. Okay, so I hope this gives you an idea of what are the areas that you have to master. Now I want to spend just 5 minutes more here, and then we can close this on the importance of mentoring. Now the best advice I can give you is that you invest in mentoring, and this is not self-serving. This is not because I have something to offer you, and in fact I do that as just as a side activity because I mainly focus on trading. That's what I do. Okay, but the reason why I tell you this, again, it's not self-serving, but because I lost a lot of time in my trading career because I did not understand the importance of mentoring and I have not invested in mentoring right away. Okay, so the 7 steps I showed you, the most important one, believe it or not, is that you today invest in coaching and mentoring, and there is really only one shortcut or easier way to successful trading. Not to mention that is also the cheaper way, because if you wait here, I'm going to share with you how much I've spent in 10 years from 2000s to learn trading. Okay. And the most important thing, there's only one shortcut, the easier way, the cheaper way is to get the help of a mentor. Everyone, majorly success, has had a mentor, and you should have a mentor too if you want to trade successfully. As they say, success leaves clue, and you want to work with people who are successful. Now, this can be me, but it does not have to. I mean, what I'm suggesting here is that you get a mentor anyway. If you want my help, you can go to flipstalkertraining.com/fearless-trader. But this is generally, could be me, could be anybody else. The most important thing is that you get a mentor. Okay, now success leaves clues. And again, I'm asking you to consider investing in mentorship. Richard Branson here, he had a mentor, and if you ask Richard Branson will say, if you ask any successful business person, they will always say they have had a great mentor at some point along the road, and this is Richard Branson, and his mentor was Sir Freddie Laker. It's always good to have a helping hand at the start. I wouldn't have got anywhere in the airline industry without the mentorship of Sir Freddie Laker, and that's what Richard Branson say. Now, proximity is power. Being close to people already doing this and model them is very, very important. Warren Buffett here, he had a mentor. A mentor was Ben Graham. Buffett picked up a copy of Ben Graham's book, The Intelligent Investor, in 1949, and it changed his life. He then went on to attend Grant's class at Columbia. Ben Grant was also a professor at Columbia University in New York and worked for him after graduating. So proximity is power. I mean, being close to people who are successful is powerful, and it's power for you. And you mentor, you also get accountability and new ideas. And we have here a famous player here. Dean was more than a coach. He was a mentor, my teacher, my second father. Coach was always there for me whenever I needed him, and I loved him. Okay, so mentoring brings you accountability and new ideas. And now you have, right now you might have some ideas in your head from attending this webinar. So this is the truth about mentoring. Okay, mentoring works, but you must invest in it, and you can decide to do it all alone. Many people I know think that they can do this all alone, and they spend years and years, 10 years, 20 years. I have students who have 25 years trying to make it work and never were able to do that. But I can promise that if you go all alone, you'll spend twice or more of the time and twice and much more the money. You can always get more money because you have a job. I mean, you can always fund a new account, but you can't get more time. Okay, there is no way we can roll back on time and go back using the DeLorean, going back to the past. The average IT computer engineer salary is $80,000, and you need 4 years of college, of university, and you have to spend several tens of thousands of dollars to be in the college or in the university. An average doctor salary is $187,000. Okay, this is USD. The minimum training is a 4-year undergraduate program, 4 years of medical schools, and that's 8 years, and then 3 to 7 years of residency training. We're talking about 15 years here to make $187,000. Now, I'm only talking about the money here. I'm not talking about the mission, the reason why you do a certain job, but in here you can see that you need 15 years to make this money. Okay, so why do you think a craft professional like trading that can pay handsomely, in fact, more than an engineer or a doctor, can be easily learned alone? It can't. And you know, even if you only grow your trading business to 20,000 a month, and that's, you know, that's more than most doctors in average, and that would be just a 10% of 20,000 account. I'm not saying that you will be able to do this. I'm not trying to represent that everybody can do this, but I'm just trying to compare here the income from someone who studied 15 years is making 187,000, and you know, you as a trader, you can make 240,000 under these conditions. This is potential, of course. Doesn't mean that you'll be able to do it, or everybody can do it. But as you can see here, people are willing to spend 15 years and hundreds of thousands of dollars on education to become a doctor, and then they're not willing to spend the time to become a trader, and trader has a much higher potential. And in some cases, in some aspects, it's, you know, it requires different skills and different kind of psychology compared to other professions. So again, attempting to do this without personal help and proper training is simply not a good business decision, and trading must be considered a business. I've had several mentors spend many years traveling the globe and working with traders abroad to learn how, you know, to learn the markets, to learn how price moves, identify low-risk setups, and spend well over 150,000 in trading costs, training, and courses. Okay, so spend many years, spend a lot of money, and only after that I could actually get to a point where I know what I'm doing. But even if this is a big effort, because I knew the income potential of trading, I knew I had to do it. Okay, but it was an uncomfortable decision every time. Every time I had to buy a new course, I had to do a new activity, it was uncomfortable. It was not as comfortable as you know, as me having figured out everything that after that course, you know, I will necessarily be a trader. For sure I would be a better trader. Okay, so Again, I mean, if you want to get the free material and information, you can go to hipsocatraining.com/fearless. You fill in the information here, and I'll get you the leaflet as well as the access to the Fearless Trader Breakthrough Seminar. This is it for today. If there are no questions, let me see if Raichini, any other here has any questions here. If there are no questions, then I want to thank you for attending this seminar on everstreet.com. And if you want to get more information, you can go to hipstalkertrading.com/fearless trader. All right. Okay. So thank you very much and have a great day. Bye-bye now.